In this video, we're going to talk about this trade with SMCX. You know my history with SMCI. SMCX is the 2x leveraged ETF to SMCI. This is my son's trade. He wanted to do it. He's the one that sold me on this idea. So we're going to go ahead and do that trade for him. In fact, this is a live trade. We're going to talk about it right here. Hey, look, stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, in this video, we're going to talk about the cash secure put. I elected to do the cash secure put for my son's account. This is my son's trade. This is SMCX. SMCI is Super Micor. And over the past 3 years, we've used it. I've used it to get my absolute nads kicked in because I bought much, much higher, and I'm kind of sitting on my hands like a dope while this thing recovers. And I believe it will recover. If you look at the charts, when this thing was absolutely getting ripped, it was trading for close to $100. It had so much bad news. I mean, everybody absolutely just washed their hands of it. And it fell all the way down to 17 bucks. Now, they had all kind of issues, and they even had a short seller come in and write a report. I'll tell you, that was one of the most frustrating deals because, man, you're seeing $50 billion just get drained out of market cap. And from what I can tell, no management was ever fired. And only recently, I believe the CFO has stepped down or is going to step down. Now, they've had some incredible news as they met some regulatory issues with the NASDAQ, pops higher, and of course, the excitement's over, and now it's trading in a range. And with recent earnings that weren't that bad, with the recent $20 billion deal with the Middle East, absolutely getting people excited, and with NVIDIA having decent earnings, this could be a sideways trade for a little bit here. So what I want to highlight, this is the 2x leveraged ETF, and SMCI is the stock. So we got SMCX and SMCI. So you can see they trade almost in tandem, obviously, because SMCX is 2x to SMCI. So you're going to get more volatility. You're going to get chances for higher premiums. I will tell you this same trade that I'm going to show you would have rendered me 67 cents with SMCI. I end up getting $1.70 with SMCX. Like I've told you many times, we're using leverage, but we have to understand what the underlier is. This is SMCI. Everything SMCI does, SMCX will be affected. 100%, nothing else. Now, of course, the markets will affect all of this, but you get my point. We are using leverage on a stock that has high volatility anyway. So we're going to get incredible premiums when we write covered calls. Now, the trade I'm going to show you now is a trade I did for my son, and I sent it out to everyone. Everyone got this trade. You could have too. What I want to highlight is the downside protection we gave, but more importantly, I want to talk about these Bollinger Bands. I always use the Keltner channel, but I'm going to use the Bollinger Bands as an example today. We also talk about the RSI. The reason we talk about the RSI, and you can see it right here, this is trading for about 51. This is your Goldilocks RSI because it's not too hot and it's not too cold. Now, that's pretty much where SMCI is right now. They've had earnings. They had a good bit of news with that contract, and NVIDIA didn't destroy the market. So it's trading in that 50 range, which is, again, not too hot, not too cold. So outside of some major tariff news or industry news, or just market news in general, this should trade in a range. And we're going to take a look at the Bollinger Bands now because what I want to show you is that is exactly what we're seeing. Now, a lot of people ask about why I use the Keltner channel versus the Bollinger Bands. Now, the Keltner channel is just Mr. Obvious. It is a stocks trading range. And what we love to do is when we identify a stocks trading range in the Keltner channel, we can start to make decisions based on where it's at. Anytime it's trading at the top of the range in the Keltner channel, you could bank your RSI is going to be higher. And if it's trading at the bottom, its RSI is going to be lower, right? Overbought versus oversold. We want to get involved when it's trading near the oversold. We're using great companies, indexes. That's a good time to buy, right? Buy low, sell high. So that's what I love to do. And if a stock is trading in the middle, what we do is we split up the Keltner channel based on where it's trading. We love to use downside protection, whether we're doing a cash secure put or an in-the-money covered call. And what we love to do is find ourselves where we have to make decisions at the low of the range, okay? Not the high of the range, the low of the range. These are bag holders up here, and most every single time you get involved at the top of the range, you are going to be the bag holder. You say to yourself, well, there's stocks that hit the top and continue to go higher. Well, do you have that crystal ball? I don't. So usually when you look at a chart and you see a stock that is banging the top all the time, what you have is momentum, and Wall Street is jumping in and they're riding that wave. And that's usually where we get in trouble. Anytime a stock trades outside of the Keltner channel top, the fall is coming. And this happens time and time again. Here's SMCX. This is the 2X leverage ETF to MicroStrategies. Every time it gets outside of the top, it's going to absolutely wreck you. That goes from 48 to 35. That is wrecking you. Here, it rallied as high as 160. There's a bag holder at 160. This thing doesn't find support until it gets to 60. We don't have a crystal ball. We would love to ride this beautiful ride. Look at this one. If you rode this up, you would be making bank. But it's that bag holder that gets involved at 43 and then it peels all the way back to 35. Now, MicroStrategies is a beast all to its own. This is actually a bad example because this is all about Bitcoin here, and Bitcoin absolutely is volatile. But my point is, anytime we get outside that Keltner channel top, you gotta be cautious that you're gonna be the bag holder. And you can see right here, this is the Bollinger Bands popped out of it. And sure enough, look what happens. Wall Street takes the profit, runs it a couple days, and then they bail. This thing's trading for 48 and it falls down to 36. Bag holders are always at the top, man. I would rather get involved when it's trading in the middle of its lower range. Now, let's focus on the Bollinger Bands. A lot of people ask me all the time, what is the Bollinger Bands? Let's go back to ChatGPT says about this. Now, there's a lot of mumbo jumbo there, but at the end of the day, it talks about the middle band is going to be your simple moving average. And then, of course, it's 2 standard deviations out. It doesn't predict anything, but I'll tell you what it does predict. I believe it predicts consolidation in the stock. And when consolidation starts happening, you're going to get a move one way or the other. In fact, I even asked ChatGPT about consolidation, what they call the squeeze on the Bollinger Bands. So with the Keltner channel, it's just going to ebb and flow. With the Bollinger Bands, you're going to get consolidation and squeezing of the upper and bottom bands. A lot of times that means it's going to move one way or the other. And Chat definitely confirms when the Bollinger Bands start to narrow and consolidate, that usually signals a period of low volatility, consolidation. Imagine that rubber band airplane. It's winding up, right? It's winding up. You're having less sellers, less buyers. You're getting consolidation. And then all of a sudden, we get the pop and it moves one way or the other. Now, again, no crystal ball, so we don't really know which way it'll go, but you can expect it. It always happens. And we most likely find ourselves on the other side of the good trade, right? Well, notice what we have here. We have it trading at the lower part of the Bollinger Band. We start to get the squeeze. I notice this squeeze. We don't know how long this squeeze is going to go, but you can see the squeeze happening. We're getting consolidation. We're getting less buyers, less sellers. Squeezing down, tightening it up, and it doesn't take long before this thing pops to the upside. Now, that upside happens to be earnings and news. That's pretty fabulous because it moves higher. Do note that it does pull back. But we love this trade right now because it's trading in the middle of its band. So what I like to do is split this up. If I were to lay a Keltner channel over this, this is exactly what we would do. It's now at the top of the middle of the range. So we want to be down here. Okay, we want to be down at the 30 range. You're saying to yourself, well, John, the top is 50 and the bottom is 20. But we don't do that. You have to split it up as to where it is right here, right now. It's trading for 36, 37. This is going to be your band. It's trading here. Let's get involved here. That's downside protection. And by the way, that would be near some solid downside protection down here prior to that great news. Earnings, the $20 billion deal, and NVIDIA not destroying the markets. This is going to trade sideways to higher. I just believe the only real news out there we got to worry about is tariffs. So that's going to be the real drag on the market, but you have at least a solid month. You have a solid month because remember, July 9th is when the tariffs come off. So I always let everyone know. I always email everyone. We got to be prepared. I don't know what you have to do, but don't have much exposure. Or the exposure you do have, you best be able to handle another downturn. There's a lot of profits in this market since we hit rock bottom. Wall Street might look to sell in advance. So although the 9th is the day, you could definitely see them selling prior to vacation, 4th of July. See, that's what I would do. If I was a broker on Wall Street, I would go into my vacation on 4th of July, and I would just sell any positions that had a profit. Why not? I mean, what's the risk? He's going to put on tariffs. Where's the upside to that? What he's going to do is probably announce some deals that have happened, but I just don't believe that's going to be something that moves the market to the upside so much. We can get past July 9th, and then we can resume trading. So we end up doing this trade. You can see it's 18 days. Look at that chart. That chart is telling us without any bad news, this thing will trade sideways to higher. We absolutely love that. I give the reasons. I mail out all the reasons as to why we got involved. This is my son's trade. He researched it. He convinced me. We went ahead and did it. You're saying to yourself, well, why are you even saying this? It's because I have taken the approach now. I'm going to use leveraged ETFs to the indexes. I really want to avoid single stock risk as much as I can. And we've been talking about this for months. We want to eliminate single stock risk because the indexes will always trade and trend as they do. We can make money as those indexes move up and down. We use the leveraged ETFs to get that premium. We could trade them all day long. I mean, why trade the SPY when you could trade UPRO and get 3 times the premium? That's what we do, right? Covered calls, sell puts. We generate that premium, buy a dividend paying stock. That's how we do it. Now, in the case of SMCI, it has SMCX. It's a 2x leverage. And right now, it's hands off for me. But here is that trade. And I want you to look at the screen. I'll dial it in. Seems like every time I mention real numbers on YouTube these days, YouTube absolutely puts its thumb on me. This is an 18-day trade. 18-day trade for a small account. Look at that. That is incredible. That's going to be 5.67% cash on cash, 18 days. It's going to take all of that right there and buy a dividend-paying stock. I'll tell you, that is what we do. So this is a video I just released and sent to everybody. We talked about BidX, how we made incredible amounts of money with BidX. But more importantly, in this video, we talk about how, even though we're down on our cost basis, we're still using the expected move calculator, and we're able to generate decent premiums by using our cost basis. And if we have a stock that has fallen, we could still write covered calls using the expected move calculator. You can still pick some strike prices for which you can still make some premium. We could still add to the cash flow, and we can manage trades where it's unlikely to have our shares taken away. That's exactly what I've done here with BidX. Still using it. My cost basis, 57, and we currently have a trade that will put decent amount of money in the wallet. Look at that top number. These are incredible. This is the last 28 days. I'll tell you, that's what we do. And I really do think as the markets go higher, a lot of people want to generate cash flow. They want to be a part of something for which they see a real professional trader, someone that is active and someone that has all the tools. They see how he does it. They get all that information, whether it be a blog post or an email or in the phone app where they can see it. They see videos that you don't see here talking about trades like BidX and why it did them to up the game. But I think it's much easier to watch somebody that derives his income by using the stock market and taking those profits and buying dividend-paying stocks. You can join me. So I want you to go ahead and look at the screen right here. I want you to consider it, and I would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.